Yeah, I feel like a lot of people, they go into business not thinking about the exit. And that's probably debatably the most important part because at some point in time, it's you want to sell it, right? You want to cash out, cash in the chips and retire. And some people just either let it die and go to zero and gradually let everybody fade off. Others will sell for, half of what it's worth at the end of the day because they started slowing down and the last 5 years cut off half on their what value would have been if they would have planned accordingly.
Welcome to the Sharpen the Spear podcast, where we help home service pros cut through the noise, sharpen their business tools, and reclaim the profit, freedom, and impact they've been missing. I'm your host, Richard Walsh, Profit Freedom Coach, and I'm here to help you stop grinding and start growing. Let's sharpen the spear. And we are back on STS, Sharpen the Spear podcast with another incredible guest. I've got Trevor Laparl with us today. And Trevor, as we always do on STS, no one knows Trevor better than Trevor. Trevor, give us some backstory, bring us up to speed. And I am looking forward to this conversation.
Yeah, thanks a lot for having me, Rich. I'm excited to be on. Like you said, nobody knows Trevor better than Trevor. So I've been in the industry for 3 years now. As you guys can tell by my young face, I am not weathered by any means, but had a lot of good coaches. I originally came in with, fresh out of college, a marketing company. So I was doing a ton of work with financial advisors, real estate agents, business brokers. Right off the bat, I came across one firm and they had a pretty unique proposition when it came to the sale of real estate, the sale of business, any really highly appreciated asset. So everything capital gains, excuse me. And they were doing a lot of work simply off referrals. I'm like, you guys have a great thing here. Like there's a lot more you can do with it. You're just getting people in from, attorneys, CPAs, or one-off client referrals. You could be doing so much more. But from another guy to another guy, you get that sometimes with being an older guy. You guys don't know as much about the online sector, all of that stuff. You seem pretty roped up in it, but you're well aware that a lot of guys in your generation aren't as keen when it comes to the online sector. So up front, I was like super big when it came to marketing. And then I completely 180'd into more of a tax, estate, financial planning role, where now I help a lot of people that come in the door with their capital gain tax liability or their retirement accounts, things in that sector. So it's a lot more exciting than just being a one-off, I guess you could say, financial advisor, where you're kind of competing with everybody saying, oh, well, I do a little bit better than this guy because we've been doing it a little longer and all this stuff. So it's a lot more exciting, I would say.
Yeah, that's great. I think what's really important, Trevor, is people, when you begin businesses, whatever it is, whatever your entrepreneurial journey is going to be, you really have to define your niche. Like you're saying, you try one thing, you're like, okay, and we've all done, I got plenty of businesses that failed, especially in the beginning, started, or you failed and also known as lost interest.
Yeah.
Like, well, this is horrible. I'm not doing this anymore. But, finding that niche is what's important. And when you really find it and you love it, like you're doing, you're driving forward, you learn how to bring value to a specific niche, which makes it easier in a lot of ways, but also way more rewarding, right?
Yeah, absolutely. And, having guys like you, a lot of guys that are your age who have either failed before, have the experience, or they already had that, hey, I did this, it didn't work. You don't need to try it. I'm going to save you some time. That saves you a mountain of, that wisdom you guys have in between, where I don't have to gain that and I can just piggyback off guys like you, which is exactly what I did. So I have, I'm the youngest owner by 25 years in the firm. So I bought into it because I'm like, hey, we could be doing a lot more, like rope me up with everything you guys are doing. So long story short, I've been with tax attorneys and CPAs all day for the last 3 years now. And so I'm fully roped in with all of these complex capital gain solutions and financial planning and all these other stuff. So it's definitely been a cool experience learning all these, quote unquote complex methods, but simple when it comes to client facing, right? It's like when you get a car, you don't look at the engine and all the interior, but you want it to do what it's going to do. And that's all you care about.
Yeah, it's kind of interesting too. Like just what you said, you take 3 years, day in and day out, and you're studying something. Okay, that's like semi fast track degree level stuff, right? So it's not, people too often equate time with experience. Okay, I get it. It is. I've got a lot, 35 years. I've been doing stuff, but what we bring on the reverse side, just like you're doing, is time compression. right? You're smart enough to know, let me get someone to coach me, to teach me who knows what I want to know and give me all the shortcuts, because shortcuts are good.
Oh yeah.
Okay. Everyone thinks they're a negative. Anyone who can save me all that. I mean, I made some costly mistakes, some really bad decisions, and it only took me 20 years, but I lost my whole business and everything else. So, all because I wouldn't ask for help, all because I didn't, you can't coach me. What do you know? You don't do what I do. That kind of level of stupid, I say, that I operated at, So if you're young and not dumb, like I was, you'll actually reach out, understand you're never going to know everything. And the more you can get someone else to give you that experience and that advice, man, it'll catapult you like it's doing for you. It's the way to go.
Yeah, and it's my saying is, it's what you don't know that will get you in trouble, And so a lot of times guys my age, and I can even speak for myself at times, you think I'm invincible, I'm this, I'm that. It's like, no, there's a lot of stuff that you don't know, and that's what's going to get you in trouble. Because there's things I know I don't know, and I'm trying to learn things like that, but it's the don't know that you don't know is what really, really gets you in trouble. So that's where, again, guys like you, guys like I have in my firm, it's like we can rely on your experience and your knowledge and your wisdom that you have, so we can really just jump past all of your mistakes. And then maybe we make new ones of ourselves, but we cut out the first 10 that you guys had, let's say, right?
Right. The other thing too, talk about an age gap like that, or let's say an age distance between my age and your age, is in the firm. Okay. We need people like you with the willingness. Okay. Everybody's replaceable. We're going to age out eventually. You know what I mean? Or just be done, So like if you want your firm or your company to continue, you've got to look at that next generation coming up, and you got to skill them up. I'm doing a lot right now with frontline teams, like in manufacturing and stuff, because the older guys have left, they've aged out. And now you're left with these young guys who straight up couldn't lead you to lunch.
Yeah.
You know what I mean? They have no skills at all, yet they're in these positions. So we got to get them skilled up quickly, and we can bring that experience and that time compression and do it in a matter of days instead of years with these guys. So it's a good thing.
Yeah, I feel like a lot of people, they go into business not thinking about the exit, and that's probably debatably the most important part, because at some point in time, you want to sell it, right? You want to cash out, cash in the chips, and retire. And some people will just either let it die and go to zero and gradually let everybody fade off. Others will sell for, half of what it's worth at the end of the day, because they started slowing down, and the last 5 years cut off half on their what value would have been if they would have planned accordingly. And so that's where we're at. It's like we want to, for one, make sure that they can sell, not pay any capital gains tax on the sale. And then 3, be able to retire with a, almost like a pension, where you still have something coming in the door. You didn't have to have the capital gains tax liability. And now you don't feel as bad about selling the business because you didn't have a 40 or 50% haircut after you depreciate everything, and the capital gains tax, the brokers, the realtors, the escrow fees, and everybody starts chipping at your pie. And that's where it gets to be really hard, especially with that big government hit. But
yeah, for sure. We talk a lot about exit strategy on this show. Okay. Big part of what I do in my business, and as I coach all my clients, it's always kind of start with the end. Go out. How long, how much? I keep it really simple, in the beginning. How long you want to do this? How much what do you want when you exit? Right. And then, and then we get into more details. How do you replace your active business income with a, income with a passive, or whatever it looks like? Right. So but when you do that and you reverse engineer, you also can lay out a great battle plan for your business when you do that, because no one does. No one ever starts. They never go, oh, I'm going to do this for 10 years. And I want 10 million and then I'll be out. No, they're trying to get to the next payroll cycle. Okay. That's what they're really trying to do. Just get through that. But when you come in and start thinking that way, it also becomes a great business filter. Because I always tell them, you're going to get other opportunities as you start to get successful. And if you can take that potential opportunity and run it through your exit strategy and say, does it get me closer or further from it? If it's closer, I'm in. If it's further, it's a hard no. Just keep it real simple. It's like, because that's how you take the emotion out of it. Yeah, it looks like a great opportunity, but you've got to stay focused on your exit. Because when you are, you'll build the business that someone actually wants to buy.
Yeah.
And you'll get top dollar for it as well. Systems, processes, it's self-running, right? It's still growing and moving forward. And people want to buy an attractive business like that. Yes, they also want to buy broke down, poorly run businesses because they know how to flip them, just like a rundown house. Okay, we can do the same thing. But man, if you're in business to win and be successful, let's go all the way. Let's put the full plan together. That's why I want to talk to you about this kind of stuff, because there's so much you can do with all of this, right? It's a vehicle. You have to consider your business a vehicle to get you somewhere, right? So let's kind of hit that, because what you're doing is so important during this journey as well, right? The tax savings, whether it's capital gains on those big sales, what's happening during the whole time. So let's kind of dive into that a little bit.
Yeah, there's, like you said, multiple moving pieces. There's taxes along the way. Obviously, when you have the business, you have a lot more opportunity for write-off, right? You can do, people always talk about, I get annoyed at that one where it's like, oh, buy a new car and you get a big deduction. I'm like, well, you buying something out of the blue just to get a deduction is not really a,
Yeah, thank you. Thank you, Trevor. See, you don't need 40 years experience to know that, to be that smart. Okay, thank you. It's good to hear someone else say that.
Yeah, spending 100% to avoid a 20 to 30% tax doesn't exactly always, make up for itself. But
that's some bad math right there.
Yeah, no doubt. Yeah, so there's, like you said, planning on the interior and then planning on the exterior when you're heading out. And that's where a lot of what we do comes to play when it comes to constructing the deal as you exit. There's things like, adding for goodwill, reworking with how, let's say I bought the trucks for 40 grand and now I depreciated them down to $1,000. You want to buy them at the $40,000 marker, not the 1,000, so you can redepreciate them over again, right? So mixing in the deal to make it better fit for both sides and then also advantageous on the exit for the seller is where we really come into play. For one, we do a lot, obviously, as I mentioned, when it comes to the sale of real estate. This works out for a real estate transaction. It works out on a business transaction, but we get a ton of work with FedEx directly, actually. FedEx came to us because we go into their transaction and say, hey, after you depreciate everything, you're exiting with 50 cents on the dollar. So do you want to exit with, obviously, after commissions and everything, let's say 90 cents on the dollar and defer all the capital gains taxes and that depreciation recapture? Or do you want to, like I said, exit with half? Kind of a no-brainer, right? So that's where we really try to come into play with having this 537 installment sale trust program. So what it is we're basically administering their installment note. So if I came to Rich and I said, hey, Rich, you got this property, it's worth $1 million. I'm a young guy. Let's say I don't have a dime to my name. And I'm like, hey, I want to pick up this property. Can I do zero down? I'll pay you, let's say, 5% interest for 10 years. And then I'll have a balloon at the end of it, right? In that scenario, you don't have a capital gains tax event. You haven't received anything, right? Same thing is happening with that trust model. But instead of, let's say, the property being collateral, the trust is collateral for your note, where then you could be backed by things like AAA rated insurers, US listed securities. It could be bonds, money market funds, a whole variety of things to where, let's say I wasn't as reliable. Chances are I won't be as reliable as a, AAA rated insurance company or a backed security or a bond portfolio or wherever. Now you can exit with almost like a retirement style pension or almost like a retirement account where capital gains go in tax deferred. Anything you pull is taxed and it grows tax deferred. So it's a really simple mechanism to exit, defer the capital gains. And then, like I had mentioned, and you mentioned earlier, the other side of it is, hey, I lost my identity. I was a property owner or I was a business owner for 20, 30, 40 plus years. Now what? So that's where it's a bit of a mental game too. And I tell people, I was just on the phone with a showman in Nevada, and he's selling around 4.5, where the property's worth 7. His net equity is around 4.5 million. He's like, I've been doing this for so long. He's like, I'm ready to get out, but it's going to feel weird. And I'm like, you're absolutely right. It's going to feel weird. You're going from being, I'm hands on the wheel to I'm in the backseat of the Uber. My head's, legs kicked up and I'm just going for the ride, getting income. And it's a different style of, management when you're going from fully hands on to basically fully hands off and autopilot.
Yeah, it's challenging to navigate that transition. A lot of entrepreneurs, some can do it, some can just go into neutral kind of hang out and do that kind of thing. It's probably just the company I keep. but I'm a big fan. My favorite sayings about retire, put four
Yeah.
new tires on and get going back down the road. That's me. So it's like, let's get into the next thing. Okay. So I'm going to go from here. Great. I'm out. I do want to take that check, shake a hand, walk out. They're in, I'm out. No one knows it's sold. It's a beautiful thing. I take my thing and I go. I've created my additional income, with from my active into my passive. And now I'm going to go start another business and get going, So I pretty much, my plan is to do that till I check out. Okay. I just gonna keep working and, like that's who I am. But entrepreneurs, they struggle. They struggle in a couple ways. One is not just so they can do something or have an identity. That's a big thing. But I think the other thing is really what to do, and they get worried about, like, I'm going to take this huge hit. Again, that's what guys like you come in. You've got to really, it's just like the death tax, estate
Yeah.
tax. Yeah, you're going to take half of my net worth because I died. That's the only, like, I never understood, like, who gave them that permission.
Yeah. It's
Okay,
incredibly
'cause,
frustrating.
like, I don't understand. Like, wait a minute, I worked my whole life and I die, and then you just come and take half. Like, thanks so much. It's bad enough with property taxes. I tell people, you don't own your property. They'll come and take it from you with a gun. Don't pay your taxes for 2 years. They will come with a gun, but you're like, people are like, I go, just saying, that wasn't always the case.
No.
You used to own it and own it. So, that's why we got guys like you. You got to help us protect this money. We got to keep our money. I'm not like sounding the alarm bells here, or I'm being all depressed, but I'm just saying that, like, there are ways. We need to understand the tactical aspect of protecting what we earn. We worked way too hard just to give it to some goof who's going to, whatever, money laundering.
Yeah, and that's where it's like you got to look for things that, for one, I've been thoroughly looked at. For the guys that have been doing this that I work with, it's been 20 years, over 3,800 plus transactions, no audits to our name. We try to actively have a relationship with the IRS rather than, Boogeyman's not going anywhere. So rather than,
Right.
Trying to run away, get on his good side, figure out what he wants, what he doesn't want, get an idea of the, the structures there. And it's all in the code. And the reason why, some people say, well, it's too good to be true, they wouldn't let you not pay taxes. The reason they let you do all this tax deferral and retirement and these, capital gain solutions, it increases the economic benefit of the entire society. If you can reinvest more in, the markets to generate more business, to generate more jobs, it's you make more money, so do they, if you're making more money. So that's where it all really fills itself out. And, it's 2025 in this day and age with all of the, online, materials you can find between social media, AI even now. You can't afford to not be literate in a lot of these things. And that's where you're going to need some, to take the time to read. I mean, it's frustrating. Even, I obviously am a young guy. When I went to school in college, they don't teach you a lick about what's a mortgage, what is credit cards, how do you, optimize your retirement account. What is a retirement account other than just putting money in it and forgetting about it? All those things are things that they don't teach you. And I feel like part of it is they don't want you to know, an uninformed consumer is easier to be, malleable on what you want them to do.
Yeah, it's really interesting. I had this thing the other day. I was having a conversation with someone. I had someone on my podcast and I got done. I'm like, But, they have an MBA, but they've never run a business, Trevor. So I'm talking to them. I'm going, wow. And I'm listening. I'm like, you have an MBA, but you don't know anything about running a business. Like, I want, like, how much you pay for that?
Yeah.
Because those are 3 initials you get. I get it. I'm certainly not intimidated by it. Okay. But the only ones that I've seen that are effective are the ones who actually have built and run businesses. Then it's like, and if you really get in a good, comfortable conversation with them, they say, well, I guess I really didn't need the MBA. I need, because none of it helped me to start and grow a business. So, like, that was the learning, right? That's the real curve in there. So it's just kind of funny, but, so I'm that guy, right? Like, yeah, cool. A lot of initials. I don't know what they mean, but have you built anything?
It's like, great, you have the alphabet behind your name, but you don't have a lick of experience. And what did that alphabet behind your name really buy you?
That's right.
Book report. That's why I got frustrated in university when I'd go to professors that have their PhD And they were lifelong school guys where they went from, a bachelor to PhD in business or in marketing or things like that. And I'm like, you've never actually gone and worked for somebody, you've only taught. It's like, how do you teach what you don't know? And like, I realized that too. It's like, you don't understand how it works to run a business until you're actually doing it. Right. You have to jump in the water and just do it. Just like learning how to swim, right? You can watch a ton of videos on it, but until you jump in and do it, it's a little different.
Yeah. Yeah. I always use the teacher trainer comparison. I go, there's teachers and there's trainers. I'm a trainer. Okay. A teacher's going to tell you, you need to do 25 push-ups, go down and up, everything else. Okay. I'll be in the office, do 25 push-ups, and they leave. I'm saying, hey, get on your face, start pushing. We're doing 25, and I'll be down there with him for the first few, making sure he gets it dialed in. I will finish counting the 25 and tell him to get on his feet. You know what I mean? Like, I'm a trainer. Now, let's do it again. I'll take them through it. So there's just a difference in a mindset, but also an application, right? So I think what you probably learned as well is when you look for these people to help you, these are people who are not just bringing you, well, they're bringing you real world experience because they're in the industry, right? So you get that, but they also have a method of training. There's a lot of different, some people are trainers, but they're not real good trainers.
Yeah.
Okay. So, again, it's like anything else in life. What's the saying? What do they call the guy who graduates last in his medical class? Doctor. Yep. So, what I mean? So it's like, there you go. Like, you just have to understand, there's good ones, there's bad ones, there's mediocre ones. What we look for is the guys who are really good. Even with accounting, I my first business, it was my fourth accountant before I got a good one. I mean, I get one, I'm like, and I don't know anything about it. And I just realized, there's got to be better. That's how I started. I was never satisfied with like, well, you're not really saving me anything. Yes, I'm current. Okay. So you got the compliance part down, but that's all you really do.
Yeah.
So you got to be careful with that, right? Because you have to understand who you're going to. They have specialties. They have limits, right? Their exposure, who they serve. We talked about in the beginning with the niche, right? You need to understand that. If they're just checking boxes for you, okay, you're not going to see any significant strategy to help you keep more, have a plan for this down the road when you sell and everything else, right? That's more like what you're doing.
Yeah, I always say that, it's like, hey, if you ask me to do your tax return 100 times out of 100, I'm going to, get you in trouble or not do it right. But when it comes to this stuff, we're subject matter experts for everything on installment sales, 1031s, everything in that sector. And that's where there's not enough time. And I always say, hey, there's not enough time in the day for the CPA to do the tax planning when they're so busy doing the filing. Not to say you have a bad CPA, it's just they don't have the time in the day. And at times, we have like an 8-hour course that will train the CPAs on what to do and how to do it. A lot of them don't want to take the time, and that's fine. I tell people, hey, just like anything, sometimes you can outgrow your CPA and you're getting into more complex, mechanisms where you're not just typical U2, file, you have a house and mortgage and whatever. Anything outside of that, it's really got to, like you said, have a specialist in that sector, in that niche. That's where it's really important to keep that in mind. And I get it gets hard because sometimes you've known them for so long and you have that relationship and you want to truly trust them, which I completely understand, but you're paying the tax, not them. So it's easy for them to say, just pay it.
Trevor, years ago, she was an accountant. She was an accountant. She was a tax strategist, right? And CPA, did kind of the whole thing, but she had a real interesting point. She said, well, when you're looking at your accountant, okay, let's say you're doing $5 million a year revenue. She goes, but your goal is to get to 25 million. Okay. She goes, so you might want to, when you're looking for that tax strategist or that accountant, whoever they are, where are they in that? If they're a 2 million a year accountant, that's where they're staying. You're looking to go to 20. You want someone who's kind of on the same trajectory. Like they're looking to do the same kind of revenue, right? They're a growing company as well because there's a different interest level, right? Because they're just in a lot of the same things you are, right? You're kind of aligned a little bit better. I thought that was really interesting insight. And I think with what you guys do too, same thing. Like, there's people who are doing I don't have the term for it. Let's call it a lower end exit. Okay. So a lower end exit to your mid to your high end exits and stuff like that, so where are you? Where are you going to be as a business? What are you looking for? So you're not going to be a guy who's generating 100 million a year in revenue and looking for an accountant deals with people who specialize in 5 million. It just wouldn't make sense, right?
Different conversation. Yep.
Right. So it's just, I really started to think about this a lot. I'd interview people and I talk about it and I deal with all my clients. I'm like, okay, we really got to get the strategy part dialed in because we're not keeping enough money. You're just in that. It just doesn't make me happy when they give it away needlessly. Okay. There's plenty of good people you can give money to who really need it. Okay. It's not your uncle down in DC. Okay. He doesn't need it. Okay. So I want to help people. That's why I bring on people like you to talk about this kind of stuff so they can go, who can I talk about getting a real strategy? Because I want to exit in 5 years, 3 years, 7 years, 15 years, whatever it is. That's just, so you understand my thought process and what I'm doing with my clients.
Yeah, because you need guys like you, because there's people in every sector where it's not just kind of like going back to the CPA conversation where they go back to the CPA, or even a financial advisor that does money management. They're not roped in on everything. Like you're very roped in on the business exit planning, optimizing for the sale, things like that. I'm looped in on it, but I'm not going to have anywhere probably ever near as much of the inside, because you do that part every day. I do a lot of the exit part every day. So it's like, it's always going to be different, where you need multiple professionals and different silos for different things. I ask this guy about this, I ask that guy about that, and, kind of silo it. And the other problem is too, at times it becomes, I understand from the CPA's point of view, they're not getting paid for the extra advice.
Right.
They're not getting paid.
It is their fault though.
Exactly. So
it's their fault.
Yeah. They're the one that has to fork out the malpractice or the when it goes wrong. So they have a vested interest in telling you no, because they don't get any upside if it goes well, So that's what I'm always trying to remind clients as well. It's on that part of it, because, obviously if they could have even if the IRS said everything's okay, they still would be a little hesitant on having you not, pay the tax on it. But when it comes to, your retirement at the end of the day, it's your money. Nobody cares about that more than you do. And that's where we're at with it. We're in the business of making sure you keep that nest egg and can pass it on to your heirs tax free, because we don't want you to end up with, obviously the estate tax threshold right now is, I think it's at the 14 mark, but with Trump being in office, chances are we're not going to see changes there. But it's always been on the hot table where, hey, they want to put it down to, 3 to 5 million. Anything up and above that, you're getting slashed in half. So how do you solve for things like that? And that's where a lot of these, trust structures come into play. The advanced tax planning for estate taxes, capital gain tax planning, all of that really has to, be at the forefront of your conversation as you get into retirement, because sometimes it'll be too late and you didn't get ahead of the game. And then I just had a situation where, depending on the state, as you're aware of, some states are community property. Others are, it's like a 50-50 scenario where, let's say you and I are in on a deal, you pass away, half of that money can get stepped up in certain states. Mostly the red states have that. A lot of the blue states are community property, to where, if one person dies, all of it gets stepped up. Had a scenario where a husband died and he was managing all this real estate. Half it gets stepped up, but she doesn't know what to do. There's still 4 million in capital gains there. And she's like, I don't know how to manage this. He didn't ever, loop me in, and, we're older. That's where it's tough. Cause at some point, like, as much as you said, you want to retire and head in a different route. If you don't think your family can handle this, chances are you're going to sell it for a lot more than they're going to sell it. They're probably going to do a fire sale. I mean, we see it all the time. Yeah. I'm sure you do too. Yep. I know realtors and different brokerage companies that literally prey on the home with, shag carpet, the avocado fridge, things like that. Right. And they know they're going to sell it for pennies on the dollar because they don't know any better. So Why wouldn't you want to put your family in a more, I guess you could say, secure scenario where you control how much it's getting sold for? The worth, what can be made out of this property, instead of someone trying to prey on it the second you die. Because someone will literally look at the newspaper, go through the death certificate and say, hey, start calling them, which is sad, but it happens all the time.
Yep, sure does. The real estate industry itself is just fascinating. I started kind of going down that rabbit hole. My son was getting into it. I'm like, man, there's a lot of ways to make money in this.
Oh yeah. Plenty.
I did a 3-day seminar. Okay, just fire hosed with everything. It's like, oh my gosh, there's a million ways to make money here. I just wanted to learn, like, what is this all about?
Yeah.
And it was wild. But there's something I want to jump back real quick. And I was thinking about as you were talking about you kind of the right person working with you from, a compliance guy to a strategy guy. You really have to understand, I don't know if you run into this much, but any kind of coaching, any kind of education, any kind of service provider, such as you, these are all, they have to be considered investments for you, right? A lot of people looking at the cost. Well, they get this, they get these fees. I got to pay them this much. I'm like, well, just like insurance, I explained to my kids, I said, insurance is transfer of risk. You need to understand that's what when you hire that person like you, it's a transfer of risk because either you're going to make that decision or someone who's a trained up professional, even if they get it half right, it's double what you would get. Okay. Because so you have to make these investments in these different areas. They may be multiple people for what seems like the same thing, but as you described, Trevor, it's not. Right. They're in their own kind of categories. You got to understand that. So it's one of those things you have to prepare yourself for and then seek out and make the investment because you have to be a long-term thinker. That's what all this is really about. Because when we talk tax strategy, it's not, it's April 1st, I better go get the stuff to the account, right? It's ongoing. It's an ongoing process. You're always looking for the next way to protect and keep what you have, right?
Yeah, it absolutely becomes part of an entire estate plan. And that's where, I said the lines kind of get blurred where you become a financial, tax, and estate planning all in one, fully roped in there because they all funnel up to each other. Because if you don't know one, you're missing out on a lot. And that's where getting ahead of the ball and getting ahead of again, if something were to happen, we don't know if you're going to go on a car ride tomorrow and get slammed by a, truck that lost its brake out of nowhere. And,
right.
That's where it's scary. It's really scary. And trying to find, I always like to say, you kind of have to math it out with the whole risk thing, right? Where if you take the money and you lose it all and you do something wrong, then that's on you. If you have a professional that does something wrong, then they have malpractice, they have this E&O insurance, they have all this stuff, bonding, where you're getting paid. Like you said, transferring the risk over, you're getting paid. And if it means you have to pay a guy, then, I always tell people at times they'll come in and they'll say, oh, well, I'm paying you, 1% for the trust. I'm like, well, the taxes are 40. If you can pay those, I'm like, what you pay us is going to cover what it's going to be for, 20, 25 years before it even hits what would have been the tax bill, let alone the growth on top of what you've been deferring. So it's like some things I get it. There's a lot of, for the 99 out of 100 guys that, or I guess you could say 999 out of 1,000 guys that do things like this, they're all good. You have one bad apple that ends up on 60 Minutes or CBS that did something wrong and it scares everybody, which is valid. And that's every industry. Any industry you go in, it's always going to be a problem there. And, there's guys that try and, churn with broker dealers commissions and different, funds and all this other stuff, which is, it's hard to navigate. I just had a girl come in, or a lady come in last week, and we do the retirement planning too. So we're helping her with her retirement accounts, but she was part of a syndication, did 5 different ones. All of them failed at the company. All of them failed. The most she got back from one of them was $57 when she put in a couple million. $57. And then they're still on the seminars trying to sell more. And she was like, I just lost my pants and you guys are over here trying to sell more.
It sounds like there's some corruption involved.
Yeah.
It's like, I don't know. I might be going on a limb there, but I think
I agree.
think there's something else going on there. Wow. That's incredible.
Class action lawsuit incoming for sure.
Yeah. It's just, but it is such I used to never think about this stuff. Like I'm what you call from money sound an avoider. You ever run into those, right? Like, listen, I'm just going to make it. I'm just going to keep making money. That was my solution to everything. I'll just make more, and that works. When it works, it works. But when it doesn't, it doesn't. Okay. So, you can only do that for so long until the other bad things happen. But, but then you start to really turn and go, okay, wait, there's actually my friends who were giving me advice 25 years ago were right. I just didn't listen. And if I would have, that whole shoulda, woulda, coulda stuff. But you start to look at it now, and it's actually kind of, I'm not going to use the F word and say fun, okay? Because it's not fun to me, but it's super interesting. And I love to hire someone who knows what they're doing. Then they get results for me. That's the fun part. Okay. I don't have no interest. I still have no interest in doing it. But if I can give it to someone else and they can have fun with it and, they can make it do what it needs to do, it's pretty cool. It's like hiring out. Yeah. It's like getting another employee or getting 2 more people on the team. So I really look at it. I have to, in my mind, I have to create these little ways of, I'll call them methods of belief, right? And so that I can get it done and move it forward and then see the results down the line.
Yeah, and I like to tell people, like you just said, it's kind of a time thing as well, where people I meet, they'll have 10 properties and they're managing them all. And they're like, well, I'm going to start paying you a fee. It's like, well, how much is your time worth? You're spending 60 hours a week dealing with all of this. If you had 60 hours back you could probably make more money flipping burgers than In-N-Out at this point with the rent rolls you're getting. So that's where it's like you can't know everything. Even when it comes to getting married, I always like to say to some people, they try to find, I want someone just like me. I'm like, I want someone the opposite of me.
Yeah, you don't want that. You know the great saying for that, Trevor. I know you're young. If we're both identical, one of us is not necessary.
There you go. Yeah.
No, I definitely don't want to marry me.
Yeah.
I can tell you that straight up. You ask my wife, man, we are not. Yeah, and that's what keeps 26 years been married. So it's like, it works. The opposites work. I'm telling you, but it is work. Here's my life hack. When you get married, you need to understand that marriage is work forever. It's good work, but you're always working. You're always working for that marriage and keeping that stuff going on fire. So just remember that if you got these thoughts of getting married soon, that it's a lifetime commitment to work.
Yep.
That's what it is. And I'll get off that soapbox.
No, I completely agree. Cause sometimes they'll say I'm getting close to it as well, getting there, but I'm like, if I had another me, I'd pull my hair out for one. And then 2, it's like, oh, you have skills that I already have. I don't have to ask you, I don't have to learn this stuff because you already know it. And when it comes to like financial things, I'm like, hey, you don't have to worry about that. I know it. Why take the time to, deal your homework, research it all, and learn all this stuff when you don't have to because I already know. Just like hiring people out. It's like, okay, this guy knows how to do that. I don't have to take a ton of time to learn and, optimize it when they already know how to do it, and they'll save me mountains of time. Why would you?
Well, you're right, because what I tell people, it's just like partnerships. Like I tell them about partnerships. Listen, there's a good saying, the only ship that doesn't sail is a partnership. Okay. But when you are actually going to get into a partnership, is kind of like the marriage thing, but even more so, they need an absolutely unique opposite skill set that they're bringing to that partnership. Otherwise, hire a general manager.
Yeah.
Hire someone you can fire, because you can't just fire a partner. Okay. So they got to really bring in something unique, and it could just be they're the money person. You just make sure they're the silent money person.
Yep.
Okay. So
you look at Meta. That's how
you got to do.
With what's his name, Zuckerberg, and what was that guy's name that put like $10,000 with them when they started out, or like 30 grand? Yeah. He didn't do anything, and now he's worth $5 billion, and he just happened to loan a guy some money.
Right time, right place. That's right. So but that's what I mean. So we really have to, and it kind of ties in with everything we're talking about here. You have to be really selective on who you're working with and even for, right? It's really important as you build your business to understand your clients, right? There's people, and I do this, we do an ideal client, profile. Like, who's your absolute favorite person? Oh, this guy. How come? And you start asking the way, okay, well, wouldn't it be great to serve only those people? Well, of course. Okay, well, let's do that. Like, how do you do that? So we start to break it down. We really analyze who they are, where they hang, right? And just like you would do, like, who's going to be your ideal client? It's not going to be the guy making $27,000 a year, at the fast food place.
Yeah.
You're just not going to chase that guy. You hope that, sometime he's making real dough and he's coming, you can help him for real, because right now there's nothing you can do for him. Right. So that's the reality of business, right? We have to understand who we're serving and how we can serve them at the highest level. I'm one of those guys too, Trevor. I'm the high level guy. I don't play in the mud.
Yeah.
Okay.
It's too hard.
I'm up,
it's too hard
I'm up in the trees. I'm at the mountaintop. taking in the full view, right? Like looking at stuff. So it's not, it's not less work. It's way more satisfying and way more rewarding. The payout's way bigger, right? So you can choose, and there's people at all levels. There's a market for everything, but I just choose to be kind of up there, and I help my clients do the same thing.
Yeah. Well, if you solve a big problem, there's, obviously a big reward for you in the end. So if you solve a small problem, then you're going to get a small reward. It's all a, correlation in that regard. So it's, and what you attract, like you said as well, it's like, if you're, going through these problems, you're talking about these problems all the time, you're going to find the guy that's having those problems, not the guy that's not having those problems. And same for us. We've gotten really good, or I'm not the one doing the marketing, but we have marketing guys that I'm in calls, between Zoom, in person, or whatever, 15, 20, 25 times a week with new people that are either selling their business, their real estate, or maybe a large stock portfolio, and are like, hey, I have a ton of capital gains. What do I do?
Well, that's a good lead flow, brother.
Yeah.
You got 15 or 25 weeks.
I know.
Good. God bless you, man. That's awesome, man.
Yeah. We've got,
you got time to talk with me.
Yeah. No, honestly. Yeah.
That's awesome. That's all right. So you got a guy who's talented in marketing, who's generating legit leads. That is, I can tell you from being in business long, there's like, that's one of those switches you don't want to ever have to like turn off or on. Just leave it. Just keep that stuff driving. We'll handle it. More is better than not enough. And it's such a good element because most people struggle with that kind of stuff. In business is generating quality leads.
That's the hardest part.
You know what I mean? Yeah. And if you got it rolling in, man, just keep them working. Reward that person. Reward them generously.
Yeah.
So it's good. That's good stuff. Awesome. Hey, so give us some kind of final thoughts on this whole the whole big picture here, tax strategy, really trying to keep more, protect ourselves from this, whether it's trust, capital gains, all this stuff, kind of put it together for us in the rather larger nutshell.
Yeah. I guess the larger nutshell is there's taxes that should be paid, but there's a lot of taxes that don't need to be paid. And it's all about optimizing for what should and what shouldn't. Of course, if you call 911, I still think you got to pay something, right? I'm not the kind of guy that's like, all right, you shouldn't be paying a dime. I want the roads to look good. I want our parks to look good. I want to have schools, things like that. Handing somebody a check for $400,000 with how they're taking care of the money now, I wouldn't do that. So when it comes to, the sale of a business, the sale of a piece of real estate, there's ways to defer capital gains, get out of the active management, and not have to worry about the, big tax bill. You can still leave your heirs with a step up in basis. All the capital gains are gone. And again, getting outside of that, like I said earlier, cashing in the chips at some point is where I'm at. It's like, all right, if you're 80 with Alzheimer's, you can't manage anymore. You're bedridden. And if you don't have liquidity, a good financial plan, and all of your money's in real estate, then holy crap. It's all about siloing risk. That's right, man. I'm big on siloing risk. You want to have real estate, you want to have stocks, bonds, you want to have things like annuities, you want to have CDs, whatever. Don't put all your eggs in one basket, right? In anything, because the second that falls, holy crap.
Yeah, for sure. I think there was a study a while back, Trevor, I heard that 24% was the number, the cap for people to willingly pay taxes. As soon as they got over 24%, people started finding every way they could to avoid it. So people, like you said, they have a general understanding, like there's a need for this, right? For civilization and all that kind of stuff. They get that, right? It's just that excessive 32, 35, 37. Now you're getting like, come on, man.
Yeah.
Like I'm working 5-6 months a year to pay my taxes.
Oh yeah.
Well, that is hard. And people don't think about it that way. But man, I do. And I try not to because it just makes me angry. So I search out people like you to go, make this go away. Just make this go away.
It's one thing to see it, but writing that check, and if you had, $100,000 of cash in front of you to give, you'd be like way different than sending a wire out to the IRS. And people forget things like adding to your AGI. If you have $1 million property sale tomorrow and you made 200,000, now they say you made 1.2 million that year. Trigger AMT, right. Can't get deductions. You're in the top tax bracket. My Lord.
Yeah, right.
Whole world of problems.
Yeah, I always said, well, if you really want to solve the whole tax issue, make everybody stroke that check on April 15th. Don't take it out during the year. You'll see it go to next to nothing. And be like, what? It's like they're all happy they're getting a refund. Everybody's all happy about their little bit of cheese they give you back. You know what I mean? So it's funny, but I could ramble forever on that. But it's just, what a great conversation, Trevor, man. I really appreciate the time today, just hitting this stuff, and people get aware. So like, Trevor, give us the website. How can people get in touch with you? Add to your 25 leads a week. Let's put a few more on there so you can talk to some more people, some more good business owners looking to do the right things.
If you're looking to, again, exit a piece of real estate or a, largely appreciated stock portfolio or business, Q1.com, again, Q-1031.com is the best place for that. We have an arrangement of Q companies. We have like Q Financial that does financial planning, retirement planning, QRIA that does the registered securities, things like that. We have Q Hedge. We have a hedge fund we're starting up. So whole arrangement of things. But when it comes to, advanced capital gain solutions, we have them all. So don't pay that capital gains tax, plan for it, and either spread it out or defer it until you die. One of the two.
Love it. I love it. All right, Trevor, you're the man. I appreciate you coming on today. This has been fantastic. And for everybody else, we'll see you on the next STS podcast. Thanks for tuning in to Sharpen the Spear podcast. If today's episode helped you think sharper, act smarter, or see new profit potential, do me a favor. Share it with a fellow home service owner and leave a quick review. Ready to find the profit hiding in your business? Head to sharpenthespearcoaching.com and book your free profit discovery call today. And until next time, keep sharpening.